Welcome to TradeStation, everybody. My name is Michael Burke, and I want to welcome you to another edition of our Art of TradeStation series. This series is designed to highlight some of the most powerful features and capabilities of the TradeStation desktop trading platform. And today's event will showcase the power of volume analysis in TradeStation. Some of the topics that I'll cover will include activity-based price charting, intraday volume average, which I think you'll find to be a very interesting custom way of looking at volume during the day for intraday traders. And we'll also look at confirming different intraday breakout patterns with volume. And we'll get started with all of that in just a moment. Please keep in mind that the following presentation is for educational purposes only. All of the symbols and trading ideas discussed are for educational purposes and are not recommendations. Active trading is not suitable for everybody. You can find additional disclosure information on the TradeStation.com website. If you have any questions during this presentation, please feel free to type them into the chat. I'll be watching the chat throughout the presentation. If, however, I don't get to your question or you have a question that you don't want to put into the chat, please feel free to email me at mburke@tradestation.com. We'll push that email into the chat, and you'll also see that at the end of the presentation. If you're looking to get up to speed with TradeStation, TradeStation Securities is now hosting a daily training channel, getting started with TradeStation on the youcantrade.com website. Every day there's something new to learn. You can ask questions, watch archive videos, all about the TradeStation platforms. So check it out with the link on the slide there, and it's free to join. And once you're ready to take your trading with TradeStation to that next level, you can subscribe to our new online masterclass. This is modeled after our in-person masterclass. You get all the same great advanced training, all of the resources and special events, but now from the comfort of your own home. And you can access all these great resources for free. You can take a 14-day free trial, and then it's just $59 a month after that. This week, there's a special week of strategy trading, which I'm hosting all week, every morning at 10:30. So if you take the trial, you can attend my masterclass and watch the archives that you missed on Monday and Tuesday and learn all about strategy trading with TradeStation for free. And if you like the content and the things that we're doing in the masterclass, maybe you'll stick around and subscribe and really take TradeStation to that next level. So our agenda today is to talk about volume and the different ways that we can use volume inside of the TradeStation platform. The first thing we're going to do is we're going to go into TradeStation, and I'm going to show you activity-based charting based on volume, the number of shares per bar, or the number of unique trades per bar. It's a very powerful charting feature inside of TradeStation that I don't think traders look at enough, and I'll tell you why I think it's compelling and something that you can experiment with in your own trading. But the main topic today is my intraday volume average indicator. This is an indicator that tells you what the volume should be at a particular time of the day. If you think about it, a volume indicator shows you what the volume is for a particular bar, but it doesn't tell you what the volume should be at that point in the day based on what the volume normally is over some number of previous historical averaged bars. And so I'm going to show you a tool that I created that allows you to see exactly what the volume should be at 10 o'clock or 11 o'clock or 12 o'clock, and whether the volume today is higher or lower than that volume. And then we'll use that concept to confirm some intraday breakout patterns, some simple ones, and be able to scan for opportunities for those breakout patterns in Radar Screen. So a lot to cover. Let's get started. So traders use volume for a number of reasons, but primarily they want to know if the strength or weakness of a price move is confirmed with volume. Typically, a strong trending market with increasing volume can help us confirm the continuation of that trend. And we see volume decreasing, it can signal that the trend is weakening and we may be moving into an area of consolidation. And as volume decreases more and more, you typically see that in the chart. You'll see areas of consolidation with typically lower volume than when the market is trending, and that increase and that increase in volume is what we're looking for. Do we have an increase in volume, and can we use that to confirm a breakout or confirm a trend or confirm another signal or trading rule that we're looking at? And that's the idea. So whenever I do this presentation, I always take a few minutes to talk about volume-based charting. These are bars that are no longer based on time, but they're based on the number of shares or contracts that trade. So for example, I may build a chart on Microsoft that builds a bar every time Microsoft trades 5 million shares. So every time 5 million shares of Microsoft trades during the day, that's a bar. The open, high, low, and close are based on 5 million shares trading. And in this mode, every bar means the same thing. Every bar means 5 million shares. So they're not time-stamped anymore. One bar may take a few minutes to build. Another bar may take just a few seconds to build if there's a lot of activity. And so it makes every bar in the chart mean the same thing. And I'll kind of explain what I mean by that when we go back into TradeStation. I can also build bars based on the number of trades per bar instead of shares per bar. So in other words, every unique trade that comes into the chart, we can count those. And let's say we want a 5,000 trade bar. So every time there is 5,000 trades, now not shares or contracts, but 5,000 unique trades, it builds a bar. And then the next 5,000 trades builds the next bar, and so on and so forth. And we see the high, low, open, and close of each of those 5,000 trade bars. Very interesting. Think about this for a second. Let's go back in time, and we're sitting on the floor of any of the exchanges where there's open outcry, and everyone is trading whatever they're trading. They're trading stocks, they're trading options, they're trading futures, whatever they're trading. And the trading in the sound in that room in each of those pits starts increasing in volume. It gets noisier and noisier. And what that noise is telling the traders is that there's more activity. There's more orders coming into that pit. There's more volume coming into that pit. And they would use that sound. They know that sound is rising and look and see which way is the market trending. And they understand that volume, they understood that volume coming into the pit is driving the trend in one direction or another. Now, we can't be on the pit floors anymore, but we can use that same concept. We just can't hear the sound. And we can do that by building these volume bars or these trade bars. And the more of them that there are, that means that there's more trades coming in. There's more noise coming into the market, more volume coming into the market. So more bars in this mode means more activity. And more bars also gives our indicators a chance to better react to the prices as they're trending. And I'll kind of show you that as we go into TradeStation. So let's do that. Let's go into TradeStation here. And all of the tools that I am showing you today, the 3 workspaces that you see at the bottom here, and any custom indicators that are applied will be in a zip file that you can download. And that zip file also includes my PowerPoint if you'd like that as well. And we'll push that link into the chat. That link will also be available with the archive of this event. Or you can email me and I'll send you that link as well. So lots of ways of getting that link. Don't worry about it. So I'm going to show you a chart here. So this is a 15-minute chart of spiders. And in the bottom of this chart is the normal volume indicator. So it's showing us how many shares traded on each of these bars. And you'll notice at the bottom that the volume tends to be kind of a bowl shape, where there's a lot of volume at the end of the day.
Hey,
there's
Mike.
a lot of volume at the beginning of the day. And then it's kind of quiet in the middle of the day between 11 and 3 o'clock. The volume is much less in that period of time.
Mike,
but it's very noisy.
Hey, Mike, can you hear me?
And the end of the day.
Mike.
Yes.
We're not seeing your charts if you're trying to show off your charts.
You can't see my chart.
PowerPoint is still showing.
All right, let me see what happened with sharing here. Thank you very much.
Yep, no problem.
I think this has something to do with PowerPoint.
Yeah, it's probably full screened over it.
Yes. So let me look at this. You still can't see my screen, Nico?
Nope, still PowerPoint.
All right. So what we're going to have to do is we're going to have to get a little tricky here, and we're going to have to close that. And let me share this again. And
there you go.
So you can see my screen now?
Yep, I can see your charts. I see SPY open.
Perfect. So sorry about that, folks. So this is a 15-minute chart of SPY. And the volume indicator at the bottom is telling us how many shares have traded on each of the bars in the chart there. So on each of those 15-minute bars. And you'll notice that there is always a lot more volume at the end of the day and the beginning of the day than in the middle of the day, like between 11 and 3 o'clock. And so there's a lot of action packed into that 15-minute bar. And what activity-based charts do is it gives us the ability to break up all of that action from just one bar into multiple bars that mean the same thing by using either a volume bar or a trade tick bar. So this is how we do that. So let me show you how that works. First of all, I'm going to show you how you can change the way that volume works. Right now, when you put the volume indicator on the chart, it is showing you the number of shares per bar. If you double click on the price bars, it takes you to the customized symbol dialog, and there's a little checkbox here, drop down, that allows you to control what kind of volume is being used in easy language. Right now it's set to trade volume, which is the number of shares. But if I change that to tick count and click OK, now the indicator in the bottom is showing me the number of unique trades per bar. And you'll notice I have a white, horizontal line here, which is my kind of eyeballing what the average number of trades per bar there is for SPY, and that's about 30,000. So every 15 minutes, there's about 30,000 trades. Now, obviously, at the beginning of the day, or if there's unusual activity, we see more trades than that, and that's where these high bars come in. But what an activity-based chart does is it gives me the ability to make all the bars mean the same thing by setting the interval to 1,000, 2,000, 5,000, 10,000. In this case, 30,000 trades. So this is how we're going to do that. We're going to go back and double click on the bars, and I'm going to change this to a tick chart. So now the bars are built on some number of trades, and I'm going to set that to 30,000. Click OK. And it takes a little while sometimes to bring that data in because it's using tick data. It's looking at every tick that comes into the chart to build these bars. So it can take a little time sometimes to build the chart itself. Notice that my volume indicator now is fixed at 30,000. That's because each bar represents 30,000 unique trades. So notice now at the beginning and the end of each day, we have a few more bars than we did before. Before, we just had that one big bar with all that volume in it. Now we've broken that up into bars with unique with a unique number of trades per bar that all mean the same thing. They're all 30,000 trade bars. And it gives our indicators a better chance to work. if you have an indicator like MACD or stochastic or a moving average, and you get one big bar where the market moves up a large percentage, your indicators really don't have an opportunity to react to that, do they? It's just one bar out of a look back period of 20 or 30 or 50, whatever your indicator is that you're using. Here, that same price move is broken up into multiple bars that your indicator has a better chance to react to. So here's the benefit with these kind of charts. When there's a lot of price action and there's a lot of volume, you get more bars. When the market is quiet and consolidating, you get fewer bars. All of us have seen our indicators oscillate over zero or oscillate over some signal because the market just is moving sideways, and it goes up a little bit and goes down a little bit. We watch MACD, or the moving averages, cross over and over again. Each of those false signals, cause us to possibly fake us out of a trade or get into a trade that we shouldn't. In this case, when the market is consolidating and moving quietly like that, we get fewer bars, and it's less likely that we're going to be affected by that kind of price action. So it's an interesting way of looking at it. I'm going to change the bars volume here. I'm going to click on that. I'm going to change this to trade volume. And now that the volume is going to show me how many shares traded on each 30,000 trade bar. So I can actually see what the volume is again, but now I can see what the volume is based on that tick chart, that tick bar. And it does not want to come in. We'll give that a second to come in, and we'll come back and look at this. So the workspace that I have for you here is using that tick concept. This is a 10,000 tick bar chart. Each bar represents 10,000 trades. And I'm running MACD inside of that chart. So here you can see my custom MACD indicator. It shows you the buy and sell points based on the MACD concept there. And I'll let you work with that, and you can kind of see the benefit. What I would do is I would open up MACD on a regular chart that you normally look at, like a 10 or a 15-minute chart, and just kind of compare the two side by side and see what you think. And then here in Radar Screen, I'm using that MACD scan on 10,000 tick bars. So Radar Screen has the ability to create 10,000 tick bar, 20,000 tick bars, just like the chart. And I can scan for real-time alerts for the indicators that I look for. So in this case, I have my MACD scan inside of Radar Screen, 10,000 ticks, and we're getting a signal here on Boeing. And again, like I said, this data takes a little time sometime to come in. So there we can see MACD is crossing above zero there. So that alert on a 10,000 tick chart, I can come to the 10,000 tick chart and see if that's a trade that I want to make. So really powerful charting style. I encourage you to experiment with it and see if it can help you in your trading. Okay, can everybody see my PowerPoint?
Yes, intraday volume concepts.
Okay, good. So the primary purpose of this presentation is to go over the intraday volume indicator that I want to show you. And here's the idea. What we want to know is how many shares are normally traded at a particular given point during the day, at 10 o'clock, 11 o'clock, or whatever time it is that I'm looking at the chart right now. As we just as we just discovered in the last chart, the volume indicator just shows us what the volume is for a particular bar. It doesn't tell us whether this particular moment in time, the volume today is higher than it normally would be. So we need to know, what is the volume right now? Is it higher than it normally would be at this point, or is it lower than it would normally be at this point? If the market is moving in one direction or another, it would be good to know whether that movement is on higher volume or lower volume or normal volume. So the indicator that I wrote does this. It basically looks at your bar interval and it creates a bucket for every bar interval. And then it goes back 5 or 10 days. And on the first bar of every day, historically, it will take whatever the volume was for that bar and put it in the bucket. So if I'm averaging the last 10 days, it goes and gets the first bar volume for all 10 days, the last previous 10 days, puts it in the bucket, we divide it by 10, and that's what the volume normally was at that time over the last 10 days. That's the average volume for the first bar of the day. And we do that for every single bar throughout the day. So you always know what the volume should be at a particular time during the day. And that's what this is designed to do. So the average cumulative volume for any point on the chart is the histogram that you see here in these 3 graphs. So that histogram is what the volume should be at that particular time during the day. And in this case, we're averaging 10 bars of, or we're averaging 10 days of volume for the last 10 days for each of those time periods in the chart. And the little crosses that you see there is today's cumulative volume for each bar. So when the crosses are above the histogram, we have higher volume at that point in the day than the average. And when the crosses are below within the histogram, we have lower volume than the average volume at that point over the last 10 days. That's the whole concept right there. So this is what the indicator looks in the chart. I've color coded it so it's a little easier to see what's going on. When the histogram is magenta, that means that today's volume is lower than the average. And when the histogram is cyan or blue, that means the volume at that point is higher. Today's volume is higher than the average over some number of days. And when it's yellow, the histogram is yellow, we are hitting a threshold of super high volume based on a percentage, alert percentage that you've set as one of the inputs. If you'll notice here in the status bar of the indicator, it shows you what the volume percentage is for today. So 54% means it's really low. The volume at this point is much lower than it normally would be at that particular time. You can see the alert percentage that you've set as an input, and you can see the number of days that you've set to average the volume. So all that information is available there in the status line right above the indicator. And although that's really cool to have in a chart, it's even cooler to have it in radar screen. So I can apply that same intra-bar volume average to radar screen, put it on a list of symbols, and very quickly see what symbols have unusual volume today at this particular time during the day. So that alert column is telling me what, if the volume today is higher than the alert percentage that I've set. You can see the volume percentage there on right next to that. So anything above 100% is blue, anything below 100% of the volume at that point is magenta, and alerting is that gold color. The next column there is the rate of change of volume from this bar from the previous bar, so that I know whether volume is accelerating in its increasing or if it is decelerating. So if we go back, let's go back there. Very good. So here in this graph, notice how the little crosses are green and red. They're green and red because if it's green, then the rate of change of volume is increasing. We're getting more volume. It's increasing bar by bar. We're getting higher volume than the rate of change that would normally be at that point. And if it's red, the rate of change is coming down and is lower than what it would normally be for that time in the chart. So lots of things going on in this indicator, clearly. But that's the idea. All right, so let's look at this indicator in TradeStation. So this is the workspace you're going to get. It is the volume average intraday. And it has a chart and it has radar screen. And so here I have two watch lists. So if you're a stock trader, I have a watch list of indexes and sectors and big volume stocks. If you're a futures trader, I've got a list of all the more popular US futures here. As anything that has volume you can use this indicator on. I'm using a 15-minute chart, but you can use a 10-minute chart or a 5-minute chart, really any resolution, but it's got to be an intraday chart. That's the idea. So here's our indicator. You can see that this is gold today, and from this is the overnight session. Then you can see the U.S. session here. So as the volume grows and accumulates throughout the day, there are periods when the volume is lower than the average volume. There's periods when the volume increases. You can see the volume kind of increased here, and we have higher volume than average during this trend here. You kind of see that very clearly there. And then the market comes down. We consolidate, and the volume comes down as we consolidate it here. So that's kind of the concept. So here in the status line, you can see what the volume levels are. You can see that we closed today at 90% of the historical volume. And I have an alert set for 125. So that's 125%. So we never hit the alert today. We don't have any yellow histogram. So I never hit that 125% above the average. And I'm averaging 10 bars. You can see that averaging 10 bars here. So if I double click on the indicator, it'll take me to, that's the wrong one. Let's double click here. This takes me to the customize indicator dialog, and you can see that I have an input for the days to average and my alert percentage. And so those are the two things that I can adjust here. You can average more bars if you want. You can change your alert to a higher percentage if you're looking, maybe you're looking for very unique volume plays that are greater than, say, 150% or 200%, you can do that. And so that's the idea. Let's look at something that's alerting here. Here's Swiss franc was alerting here. So Swiss franc had a sell-off today on higher volume. You can see that really clearly here. And we kind of consolidated. So even though we were above our alert threshold at the same time, notice that the little cross has changed to red, telling you that there is a slower amount of volume coming into the chart. The rate of change is decreasing over what it normally is. So that's a good signal that we're consolidating there at the end of a downtrend. So that's kind of the concept there. Let's see. We'll look at something else here. So Japanese yen, same kind of thing. Let's go to stocks. So we had an alert on CVS here at the end of the day. So we were in a downtrend for most of the day there, and the market reversed, and the volume picked up on that reversal trend there at the end. So for me, I'm, as a trader, one of the questions that's coming into the chat is, how do I choose the right number of days for the historical look back? And so in my thinking, and your thinking may be completely opposite of mine, but my thinking is I always want to look at the most relevant data. So I don't look at a lot of long-term moving averages. I like to look at short-term moving averages. I'm trying to see what's going on with the market and the data right now. And same thing here. I'm only looking at the last 10 days of historical volume, but you can change that to 20 or 30, whatever you think is relevant for your type of trading. All right, let's look at this indicator in radar screen. So basically the exact same concept is here in radar screen. We can find alerts in the alert column. Those alerts are any volume that is greater than our alert percent. You can see our alert percent over here at 125, and we're using 10 days to average. So basically, I have all the same information here in each row of radar screen that I had in my status line here in the chart. And so again, this red and green column in radar screen relates to the red and green crosses in the chart. So here in the chart, I'm looking at multiple days, but in radar screen, I'm only looking at this very last bar. So I'm only looking at that very last bar. Notice how that very last bar is green. That little cross is green on the right-hand side of the chart. And that's reflected here in this little green cell, telling me that the rate of change is increasing on that bar in the chart. Radar screen is always looking at the last bar in the chart. And the chart gives us historical perspective. Radar screen gives us the ability to see alerts right now in real time. If I right-click on the column heading here in radar screen, I can go to Studies and edit intraday volume for all symbols. Here, I can change, again, the days to average, and I can change the alert percentage. So all the same features that I have in charting, I have here in radar screen, but now I'm looking at alerts on all my symbols in radar screen, either for stocks or for futures. Here's another cool feature of this. This indicator, since it works in radar screen, it also works in scanner. So you can do a global scan for those stocks right now that have unusual intraday volume. It's really an interesting way of looking for symbol candidates to trade. And you can do that with radar screen or scanner. So one of the questions is why cumulative volume? If it is high volume day, then every bar will be higher, and that is very true. You can have a really big volume event at the beginning of the day, and that will tell you that and that could cause the volume to be greater than the average for the entire day. And I completely agree with that. But that's good to know. It's good to know that the volume today is greater than the average at this particular point. But you can also see whether or not that volume, that big volume event, is continuing to happen by the rate of change of the little crosses. So if you have a big volume event like here, if you look in the chart here on CVS 3 days ago, we had a big volume event at the very beginning and we hit our alert. But notice the red squares, which means that even though we had a big event at the beginning, that volume, the rate of change, was actually decreasing. And eventually we weren't alerting anymore. We just had high volume. And again, the rate of change is going down, and eventually the volume for that day dipped below the average. So it just gives you some really good insight into what's happening with the volume intraday at any particular point during that day. Now, right now we're at the end of the day, so I can't show you what happens in real time, but when you look at this in real time tomorrow, you'll see exactly how this builds and how that information is displayed during the day. Back to PowerPoint. So the last thing I want to show you today is one of the ways that you can use that volume average to help confirm different price breakouts. And so I have an indicator that I'm going to share with you that identifies 6 different price breakouts intraday. And those 6 price breakouts include today's open, if the price bars cross today's open, if we have new highs. Notice that the white crosses here, that represents today's open, and you'll see that on the chart. And when the price bars cross that's an alert that we can find. The little blue circles on the bars indicate new highs today. So that's a new intraday high. The blue crossed line is the previous day's high. So I'm looking for breakouts of yesterday's high there. The red line is the previous low. So I'm looking for breakouts of the previous low. This is the previous close, the yellow line. And then new intraday lows are the purple dots. So those are the 6 patterns that I'm looking for. Here you can see I have my intraday volume indicator at the bottom of this chart, and it gives me the opportunity to see if I'm looking at a particular chart, or I get an alert in radar screen for a particular breakout. I can come to the chart. I can see what's happening with the volume in conjunction with that breakout. The other thing that I often do is I look back to see what happened the last time. So I might go back 1 or 2 or 3 days and see what happened the last time the price tried to break out of the new high. Did it bounce off of that last time, or did it actually break through? And what was the volume profile at that particular time of the day? So it gives you lots of information, lots of different ways of looking at opportunities. So this is radar screen here on the left, showing the different breakouts. I have the breakouts broken down into 2 ways. You have current bar breakouts, which is new highs and new lows, and then you have previous bar breakouts, which is the crossed lines here. So the little dots are the first column here, which is the current bar breakout, and it looks for new highs and new low breakouts. So here, if I click, oops, okay, that's funny. So this is not TradeStation, this is PowerPoint. So let's go into TradeStation so I can actually click on something. So hold on. There we go. So here in TradeStation, I'm going to click on my intraday breakout workspace. So again, you get all 3 of these workspaces with these tools in that zip file. Make sure to install the ELD files, the easy language first, and then open the workspaces. So let's look at, so we have a number of different breakouts here. So let's look at coffee. So here we can see today, coffee had lower volume, and we made some new highs. That's the little blue dots there. That's the high of yesterday. You can see that those little blue crosses are on the same level as the high right there of the previous day. And we really couldn't break out of that channel today. If you look at yesterday, we had high volume most of the day yesterday. We had a nice trend, and then we kind of reversed and went through all of those levels. And we were making new lows. So the idea here is to identify unique opportunities of breakouts, either new intraday highs or lows, or breakouts of previous days, open, high, low, and close, and today's open. And verify and confirm those breakouts with volume. And this is a way of doing that. Notice that here in radar screen, I have that same intraday volume indicator right here in radar screen. So when I get an alert, I can see whether I'm getting that alert on high volume. So this is Japanese yen. We looked at that a little bit earlier. So volume is increasing. We're getting green crosses on high volume days. That's the idea. So lots of different ways of using this. Maybe this gives you some ideas for the way that you want to trade. Maybe there's some modifications that you think would be better than what I have here. And I think that's awesome. All of the indicators that I'm giving you here, you have access to the open easy language code. So you can go in and see exactly how I calculated all of this and make modifications or build it into whatever tools that you want to build for your own trading. Okay. So as I've said before, if I didn't get to your question, please feel free to send me an email and I'll be sure to answer your questions. If you have any trouble with the zip file or downloading any of these tools, again, please feel free to email me and I'll help you with that. Any comments you have, any topics that you think would be good for this Art of TradeStation series. I'm always looking for feedback from customers to try to make these events tailored for the things that you're interested in, the things that you want to trade. So thank you for letting me share all of this with you. And I hope to see you at another Art of TradeStation event. We'll have one again next month. I don't know what the topic is because I haven't decided yet, but it'll be great. I am sure of that. So thanks to everybody for joining us, and we'll see you at another event. Good luck in your trading. Have a great evening.